What's going on, guys? The market has a split personality right now. The S&P 500 and Nasdaq just posted their third weekly gain in a row, but the Dow fell, retail sales just dropped by the most in over a year, and oil is climbing on a live Strait of Hormuz situation that nobody seems to be talking about. Meanwhile, the fear index is sitting around 14, which tells you complacency is high. This week is a macro crossroads. Retail giants report earnings, Nvidia reports later in the month, and the Fed's Jackson Hole Symposium is right around the corner. Today I recap what just happened and lay out 3 themes I'm watching for next week. Not investment advice. Let's start with the scorecard. For the week ending August 14th, the S&P 500 gained about 0.4%, and the Nasdaq gained about 0.1%. That makes 3 weekly gains in a row for both. But the Dow Jones fell 0.6%, so the blue chip side of the market is not participating equally. The big macro story was July retail sales. They unexpectedly dropped 0.6%, the weakest print in more than a year. Economists expected a small gain. Instead, consumers pulled back at online stores and auto dealers. Jobless claims held near cycle lows around 199 to 209,000, but continued claims ticked up, which means people who lose jobs are taking longer to find new ones. Treasury yield stayed elevated around 4.6% on the 10-year, and the VIX fear gauge is around 14. That is low. That is complacent. The risk nobody wants to price is oil. Brent crude has climbed to around $83 to $88 a barrel, up roughly 16% since the Iran war started. The Strait of Hormuz, which handles about a fifth of global oil shipments, is still a live issue because Iran is demanding concessions before reopening it. The International Energy Agency now expects world oil demand to fall by 1.6 million barrels per day in 2026, partly because high fuel prices are crushing consumption. But equities are acting like this is not a problem. It might not be, if a deal gets done. But if the strait stays restricted, or if the conflict escalates, oil can spike fast, and that feeds into inflation and consumer pain at the exact moment retail sales are already soft. That is the disconnect. The market is priced for resolution, the news is priced for risk. So what is on deck? Tuesday we get housing starts and building permits plus industrial production and capacity utilization. Wednesday brings the FOMC meeting minutes from the Fed's last meeting, which traders will scan for any change in tone after the weak retail print. Thursday has weekly jobless claims and existing home sales. Then the big one for stocks, retail earnings. Walmart, Target, Home Depot, Lowe's, TJX, and Urban Outfitters all report. That is a real-time consumer health check. And Nvidia reports Q2 earnings on August 26, which sets the tone for the entire AI and semiconductor complex. Expectations are enormous, with revenue forecasts around $93 to $95 billion for the quarter. Here are the 3 themes I am tracking. Number 1, consumer stress and discount retail. With retail sales dropping and Walmart and Target reporting, I want to see whether bargain retailers are gaining share or whether even they are warning. A beat is not necessarily bullish for the economy, it might just mean people are trading down. Number 2, the semiconductor setup into Nvidia. Nvidia is the arms dealer in the AI boom. The stock and the whole SOX SMH complex will move on its August 26 report. The bar is high, which means the risk of disappointment is also high. Number 3, energy as a geopolitical hedge. The equity market is ignoring the Strait of Hormuz. Energy names or the XLE ETF offer a cheap way to hedge if oil breaks higher. Just remember, if a deal reopens the strait, that trade reverses fast. So what's the honest take? Indexes are at or near record highs, the VIX is sleepy, and the macro headlines are mixed at best. I am not chasing the broad market here. The better play is dispersion, find the sectors that are actually moving on. Real catalysts. Retail tells us if the consumer is cracking. Nvidia tells us if AI demand is still accelerating. Energy tells us if geopolitical risk finally gets priced in. Those are the 3 places I am watching next week. If you found this useful, like and subscribe, and I'll see you in the next one. Not investment advice.